Traders prepare for a grand farewell from the Fed. In today's cover story, President Obama's latest executive actions target U.S. manufacturers. Plus, how to stay off the radar of hackers this holiday shopping season. And the inventor behind a famous board game needs a cash infusion. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Wednesday, October 29th. In today's First Look, U.S. Homeland Security beefs up protection at federal buildings following the recent terrorist shooting episode in Canada. Traders hit the sell buttons on Facebook and Gilead Sciences. Facebook shares lost 11% last night on earnings that beat expectations but came with concerns about expenses. Gilead Sciences dropped more than 3% on slowing sales of its hepatitis C drug. The FTC sues AT&T over false claims of unlimited data. Alibaba tops Walmart in market cap by hitting $248 billion. Baba shares blasted briefly above $100 yesterday, and stocks rise sharply ahead of today's Fed meeting. In a late session rally, the Dow steamed 188 points higher, the Nasdaq shot up 78, and the S&P 23. Gold and oil had modest moves. Larry Shover of SFG Alternatives joins me now. Larry, we have had a Fed frenzy in this market going into today's meeting, which wraps up, and we're likely to hear the end of QE3. What do you think is likely to be the fallout throughout this session?
You know, I think what's going to happen is the market's going to continue to be comfortable with the fact that even though the balance sheet is going to shrink, the important things like the zero interest rate policy are going to remain in place. So the fact is we're healing, and it seems to be that we're okay with what the Fed has been doing.
What's your take on Big Blue's plan to buy back $5 billion in shares?
Yeah, you know, it's very popular to do, and in this low interest rate environment and in a way to prop up revenue, prop up stock price, it makes a lot of sense, and we continue to see a lot of companies do it.
Despite all the negativity out there, consumer confidence comes in so hot at 94.5. What does that tell you about consumers?
Well, what it tells me is that we are healing as a nation. The jobs picture is getting better. We're seeing people feel a little bit more wealthier, even though they may not be, just because of low interest rates and been able to pay down on credit cards, et cetera, et cetera. So people just feeling a little bit better about prospects going forward.
President Obama came out yesterday and talked about the Ebola outbreak, really calming fears, saying there's not a huge situation to worry about here in the United States. Will that mean anything at all to the market today?
You know, I don't think it will, only because we've had time to digest it and time to react to it, and we still don't know a lot about it. However, just like any type of geopolitical risk that goes on in the world, the market just needs time to absorb it, and it's already done so.
Thank you, Larry.
Thank you.
This could be it, the Fed's big finale as members potentially pull the plug on a $14 trillion bond buying program. The quantitative easing plan, better known as QE3, was intended to stimulate the economy. While the majority in the financial world believe the Fed will end QE3 at its meeting later today, one money manager says it may not be over.
What they're probably going to do, though, is keep the bond buying maybe a little bit longer until you see a little more strength in the economy, but no actual hike in interest rates, probably not before the middle of 2015. Even then, it's going to be very, very gradual.
One of the reasons why Julie Neiman believes the bond buying will continue is a lack of inflation. Gold and oil, often viewed as inflation gauges, have fallen under QE3. What the Fed is now concerned about is disinflation. Chuck Coppola joins me now with today's cover story. Chuck.
Good morning, Angie. In our cover story, manufacturers react to a boost from the Obama administration. Some are calling it the first big step forward in 16 years, but others ask, wouldn't tax reform be better? For now, $500 million is being directed by executive action to help manufacturers create new technologies, buy equipment, develop prototypes, and train apprentices. Some of the more than 200 manufacturers preparing to open a trade show in suburban Chicago shared mixed opinions of the president's boost for manufacturing.
I think I'd first talk and think about incentives for bringing the manufacturing back, and think about the taxes that need to change.
Hutzel, who's worked in manufacturing for 50 years, co-authored a book on reshoring manufacturing with Dave Lippert, president of an Ohio caster company.
In our company, Junior Achievement just ran a tour of 8th graders just last week. I had them for 3 hours. It's for probably all 12 of them, their first and only introduction to manufacturing, what it is, what it looks like. That doesn't happen enough.
Monday, the president announced executive orders to help manufacturing. $300 million to encourage development of new technologies and equipment, $100 million for apprenticeship programs, and $130 million to help small manufacturers partner with universities to bring new products to market.
Our GDP right now for manufacturing, I think the latest number I saw is 12%, 12.5% of the American GDP is in manufacturing. I think there's a real chance that we can push that up to 17, 18%, maybe more.
United Steelworkers International President Leo Gerard said this is the first president in 16 years to bring together people from business, government, academia, and labor to talk about the future of manufacturing.
I don't think you can do a better investment than to invest in training, invest in skill development. And that, I think, would work much more effectively than just a scattershot tax incentive to employers, which may or may not actually raise the skill level of not only their current employees, but trying to bring new people into the field.
In about 2 weeks, the U.S. Bureau of Economic Analysis will have its latest snapshot of the gross domestic product by industry. It'll measure growth for the second quarter of this year.
A slow buildup is happening in the housing sector. According to Case-Shiller, home prices in 20 cities gained 5.6% in August compared to a year ago. But that number is down from a 6.7% gain in July. It's also the 8th straight month prices have inched lower.
Amazon plans to open a new distribution facility in Illinois. It's the first foray in that state. The e-retailer will spend $75 million to build the center. It means 1,000 new jobs when the center opens next year. According to the Bureau of Labor Statistics, Illinois now leads the Midwest in job creation, adding more than 19,000 positions last month alone.
Job cuts reportedly are in the works at HBO. Variety reports 7% of the HBO staff could lose jobs. The CEO of Time Warner, which owns a cable channel, is said to be under intense pressure to improve Time Warner's earnings, especially after rejecting a $75 billion buyout bid from 21st Century Fox owner Rupert Murdoch. Time Warner stock fell sharply last summer and closed last at $79.
Amgen is also planning cuts to its workforce. The biotech company revealed in its earnings report that it's shedding 5% of jobs. It's also boosting its dividend by 30%. Amgen CEO also squashed rumors of a breakup yesterday. Activist investor Dan Loeb from Third Point has pressed Amgen to split in two. However, the CEO says the proposal does not make sense for shareholders. Stock closed up 6% at $157.
A multi-million-dollar Medicaid billing fraud scheme has been uncovered in the Big Apple. A New York U.S. attorney accuses the city of New York, along with Computer Sciences Corp., of allegedly orchestrating the scam. The federal prosecutor, Preet Bharara, claims the city and the company used computer programs that filled out tens of thousands of false claims submitted to Medicaid. A spokesman for Computer Sciences Corp. says his company and the city did nothing wrong.
Two of the most talked about companies on Wall Street could soon be PayPals. Apple and Alibaba may go into the mobile pay business together. Alipay is Alibaba's mobile system for Chinese consumers, while Apple Pay rolled out in the U.S. this month. At the Wall Street Journal conference earlier this week, the CEOs both expressed interest in working together. Tech analyst Rob Enderle explains the potential benefits.
Alibaba wants to move in this into the U.S. market pretty aggressively. They want to participate with some type of a payment strategy to do so. Apple clearly wants to move their Apple Pay service much more broadly. The end result is both companies can see some benefit in partnering with the other.
Enderle says the deal could face some hurdles, though, due to tense relationships between the U.S. and Chinese governments.
In this week's IPO Watch, Boot Barn, the retail chain, sells Western and work-related footwear. Shares are expected to trade between $14 and $16. The stock kicks in Thursday under the ticker symbol BOOT. Also due out, Shell Midstream Partners. This company is involved in developing and acquiring pipelines. The price is likely to range between $19 and $21. The ticker is SHLX. Drivers are getting a break on gas prices unless they drive certain kinds of cars.
The boom of shale oil is easily converted into low-octane fuel. That means drivers of luxury automobiles, though, which often require high-octane or premium gasolines, they aren't seeing the same kind of price drops. Regular gas prices are at 4-year lows.
4 years after the Deepwater Horizon explosion, scientists claim a bathtub ring the size of Rhode Island has formed at the bottom of the Gulf Ocean. A new study from the University of California says residue from the spill has collected at the site of the disaster. BP responds the authors failed to identify the source of the oil, leading them to grossly overstate the amount of residual Macondo oil on the seafloor. Also, BP reported yesterday that earnings fell 18% in the quarter on lower oil prices. Shares last traded 2% higher to $42.
A fashion miss is hurting shares of Coach. The retailer beat sales estimates but missed on earnings. Coach reported solid growth overseas, but analysts worry about a drop in North American sales. Stock fell $2. Pfizer topped expectations. It reported brisk sales of cancer drugs, sending earnings higher from last year. It's now trading at $29. And chemical maker DuPont also scored big last quarter with higher earnings and revenue. DuPont says lower expenses helped offset a weak agricultural environment. Its stock closed up 7 cents at $67.
Turning to the economic calendar for today, it's the MBA Mortgage Index, crude inventories, and the FOMC rate decision. On the earnings calendar, it's a biggie. Weight Watchers, DreamWorks, Hershey, Ralph Lauren, Kraft Foods, Visa, Allstate, WellPoint, First Solar, Phillips 66, Goodyear Tire and Rubber, and SodaStream. Still to come, the retailer promising to keep doors closed on Thanksgiving. Plus, why small business owners are on edge ahead of the midterm elections. And with hacker fever running high, find out how to stay a step ahead of cyber criminals this holiday season. Don't miss it.
Costco employees have reason to give thanks. The retailer will close on Thanksgiving. Despite many other major retailers opening on the holiday to spur shopping, Costco is holding firm and says employees deserve to have the day off so they may spend it with their families.
As if the Christmas shopping season wasn't stressful enough, now there are concerns about cyber criminals stealing credit card and debit card information. Joining me on set this morning, Don McNamara from McNamara Capital Investment Group. He's here with tips on protecting your plastic. Do you suspect there's another major breach out there waiting to happen this holiday season?
Well, I think it's one of these where, identity thieves kind of keep an eye on us because there's a lot of distractions. We're busy. It's kind of chaotic, more so than other times of the year.
You brought 5 tips to make it a happy holiday season, starting with paper or plastic. Is this a year that we should be using cash versus credit cards?
We're using cash. Obviously, that helps to protect your information because you don't have to volunteer anything. Other things you want to pay attention to are using credit cards more so than debit cards because they typically offer more protection.
You also suggest shopping secure sites. How do you know if a site is secure?
Well, when you're actually shopping a site, you want to make sure you put the company's name right into the web browser. Don't follow links from emails or from social media because they could be a scam. The other thing you want to do that's critical, when it's time to put your credit card information in, it'll say up in the left corner, HTTPS. That extra S means that the site is secure.
You also mentioned keep your online guard up, and some people are failing to do this.
Right. You want to watch the kind of personal information that you're volunteering. They had done a survey, and it was kind of shocking. People are volunteering information like mother's maiden names, children's dates of birth, social security numbers. If you're online shopping, they shouldn't require any of that information.
Number 4, engage your eagle eyes. Does that involve watching your statements from credit card companies?
Absolutely. If you can watch it weekly, that's a good sign. If you can watch it daily, that's even better. Anything that is starting to get used, what you want to do, the sooner it gets caught, the easier it is to clean things up. Then you also want to make sure you get copies of your credit report once a year, check your scores. Make sure everything on there is okay. There's 3 major bureaus that are responsible for providing you with a copy of your credit report. You can actually go to our website. There's links where you can get those free reports at McNamaraTag.com.
And last on your list, give yourself the gift of monitoring.
This is in case, if you do feel that your information's been breached, you may want to get yourself a credit monitoring system. What this will do, with all the things that have happened with data breaches, we've seen companies now offering it to customers because of the fact that their information was breached.
Take it.
It's one of those situations where, we want to make sure you're not getting breached. What credit monitoring does is they're going to actually make you aware or alert you anytime somebody's either getting a credit card or it's trying to attempt to get a credit card or a line of credit in your name.
Terrific to have you here. Come
Thank
back
you.
again. Thank
I
you.
will.
Coming up, Facebook had a rough night post-earnings. Will the stock have a hangover today? And rescue operation. Why fans of the popular board game are chipping in for a real-life surgery.
It's Max from Blue Tax. If you owe more than $10,000 in back taxes, I have important news for you. Because you can count on 4 more years of heavy taxing, the time to settle your tax debt is now. Don't lose your chance of paying as little as 1/4 of what the IRS would previously accept. We'll resolve your wage garnishment before payday and stop ink levies right away.
Call Blue Tax right now at 1-800-641-2512. Stop your tax debt now. Call 800-641-2512. 800-641-2512.
A crowdfunding operation is underway to help the inventor of the popular game Operation. John Spinello created Operation while he was a student at the University of Illinois. He sold the rights for $500 back in the 60s to a toy company along with the promise of a job. Well, that job never came through, while Operation went on to generate $40 million. Spinello says he's not bitter. He's just happy people enjoy the game. He also is in need of $25,000 for oral surgery. Money's being raised at crowdrise.com and iloveoperation.com. We wish him the best. Bill Mahler steps in now with a small business update.
Angie, with the midterm elections now less than a week away, America's small business owners are, well, a little jittery. That's what the October Small Business Scorecard finds. The survey is taken each month by the online payroll processor SurePayroll, and Andy Rowe is SurePayroll's general manager. Now, you survey people who own and run micro businesses with 10 or fewer employees. So what are their big concerns vis-a-vis this election?
Well, there's certainly a lot of trepidation out there. The fact that these small businesses are Main Street USA, and they're concerned about who their constituents are going to be going forward and going to Congress. And are they going to be trying to work out some of the issues that they're concerned about that affect the economy and also their businesses each and every day?
Specifically, what kinds of things are most concerning to them?
Well, about 60% are concerned about health care, about affordable health care for not only their businesses but also their employees. About 50% are concerned about tax credits. Are they going to be extended? Are they going to be modified? Are new ones going to be created? And about 33% are actually just concerned in general about the increase in government spending.
Interesting about health care because micro businesses are not subject to the Affordable Care Act.
Yeah, that's correct. But still, they're very concerned about retention and engagement for their employees. So they still want to make sure that health care is affordable, not only for themselves as business owners, but for their employees.
You also asked a different question this month as well. How do these small business owners feel about their state government and policies there?
Yeah, well, certainly they feel the impact of that health insurance and certainly the taxes each and every day. So they're concerned about the shift to government spending. And really, is that a trend, or can that money actually be shifted back into the economy to pump up the small businesses?
How about your usual questions on pay and hiring?
Pretty much flat, down less than 0.1 and 0.2% from last month, but flattish.
And then the 1099 question, the number of contractors, that was always telling throughout the recession because those numbers were going up.
Trending down for the first time in a couple of months, and I think that speaks back to the trepidation that's out there. A little dip in the optimism, down about 11 points, but I think we'll see that bounce back here after the elections are over.
All right, well, in a month we'll take a look at the November numbers to see how they felt about the actual results from the election. Andy Rowe from SurePayroll, thanks so much.
Thank you.
Just ahead, will Facebook post a rally or a sell-off now that earnings are out? A trader reveals his thoughts next in Chart Talk. Of Option Hacker joins me now for a closer look at Facebook, which came out with earnings after the close last night. What do you think is likely to happen with the stock today? It was really getting some fluctuations after the bell.
Right, so the stock was all over the place right after the report came out, and they had a really good quarter. They beat on top and bottom lines by more than what I thought the market was expecting them to beat by, and I really do think the market was expecting a beat here, and anything less, we would have seen the stock sell off aggressively. Now, like I said, right after the number came out, the stock price was all over the place, and it's very possible that we see Facebook kind of flatline through the rest of the week. Because the market makers were expecting such a large outside move in Facebook, it's very possible that we see it just kind of sit here at a level where both the bulls and bears will lose money.
All right, now Electronic Arts also reported in. This happens to be, I know, a very favorite trade among traders. So sometimes it's just a trading vehicle. What do you think about this stock?
Right, so the stock spiked higher right after the numbers came out. Looks like they had a really good quarter. We have to take a better look at guidance to see maybe what it is they're thinking for the holiday season. But it moved every bit of its implied move. I think it still has a little bit of upside left. The market makers were implying a target just below $40.50. This was a very strong stock going into earnings. It was breaking through key technical resistance to the upside. It has rallied 7 of the past 8 quarters on earnings. I got long this day, and I'm hoping it holds up through Friday.
I hope that happens for you. Thank you, James.
Thank you.
Coming up on tomorrow's show, our film critic brings his top picks debuting at the box office this holiday season. From all of us at First Business, have a great day.